Welcome to the Manifestation and Money Podcast, Anmol.
Thanks for having me. I'm looking forward to chatting with you.
Yeah, I would love for you to share with the listeners because on the show here, we go down paths of manifestation and down paths of money. So today we're definitely heading down that money path. And I would love for you to share with the listeners who you are and what your story is.
Definitely. I trade the stock market for a living, a trader and an investor, and also a high performance coach for traders and investors and fund managers. So maybe you watch the TV show Billions. There's a girl there, Wendy Rose. She's like the psychologist for the hedge fund managers, teaching them how to stay calm in the moment when they're risking millions of dollars every day. So that's a lot of the work that I do these days with traders and investors, is like working on the psychology element of it and how they can tie in a lot of different concepts. But yeah, that's pretty much what I do for a living. And I wrote a book, Prepping for Success, which I'm an author of, which is all the things that I've learned in my journey in my life, putting it in a format for people to get an idea from.
Neat. When you're doing trading, are you trading stocks or crypto or
Yeah, so
both?
trading, I pretty much trade stocks only. Crypto for me is like an investment. So like I've invested in crypto, but that's more like I'm not looking at it. It's long term. We'll see what happens. But actively trading in and out, that's I do with the stock market.
Okay, so let's dip down what it looks into. So would you consider yourself a day trader then?
I consider myself a trader. So
A
I think,
trader.
yeah, a good trader would have all styles. Like we call it, we're an opportunist. If the opportunity exists for a day trade to get in and out the same day, I'll do that. But if
Mhm.
there's an opportunity where I feel like this can be a good one for the next 2, 3 weeks or like the next few days, then I'll do those too. So wherever there's opportunity, that's kind of where I go. But yeah, I do both styles, day trading as well as long-term stuff.
Okay, fun. I would love for you just to share a glimpse into what does your day look like as a trader? What is kind of your lifestyle perk that goes along with you making this money?
Yeah, I think the lifestyle perk really, is the fact that you're doing it from home pretty much. You can do it from whenever you want. So primarily my day starts with I get up. First thing I do is probably shouldn't be doing it, but first thing I have a cup of coffee. That's like my standard, I guess the Wall Street diet, right? You gotta start your day with coffee. So I start the day there. I come to my trading desk and I take a look at what the markets are doing, what the news events are around the world, or what stocks are moving up or down. So before the market opens, I'm just trying to create like a list. Okay, these are the 10 stocks I'll be watching today. And I'll start to make a list and then I'll come into trading. I'll typically do that from 9:30 till about 12 p.m. when I'm actually in and out of trades. And then majority of my day right now after that trading is done is usually coaching my students on traders, investors. I run a live stream where I stream myself trading, win or lose, people get to see it in real time. So I enjoy doing a lot of that stuff throughout the day and having great conversations like this with people like you. The perks really are the home part. And I think the pandemic really gave me a great appreciation for that. Like so many jobs and businesses that we took for granted that they could never shut down, but a lot of them faced a lot of issues. Whereas for us with traders, there was no disadvantage. We were still at home anyway. We're used to trading from home. So working from home was not like an adjustment. It was just something that we had been doing all along. So yeah, the perks are just like we're not having any traffic. You're walking from your room to your office over here. You're not getting stuck in traffic, and also allows you to travel. Like I take my laptop and a monitor, mouse, keyboard wherever I travel in my bag, and Airbnb or hotel wherever I'm at is my office for the day.
Neat. And that's fascinating. So you let your students, and are they like paid students of yours that watch you do your trades?
Correct. Yeah. So sometimes we'll do a free one, just a free session for the public, but majority of the time, these are members that are part of our programs and kind of learning how to do it alongside me.
Neat. So you're able to walk them along while you're making the trade, what you're looking for.
Hmm.
So, what would you recommend for somebody who is new to wanting to do what you do? What are some of the key things you look for? I'm assuming get a mentor right out of the gate would be one of the big things, but what are some of the things that you're actually looking for in doing the trades?
Yeah, so I think first thing people have to realize is figure out, are they really cut out for trading? Because, it's not as easy as perhaps people make it seem like online, right? It's like a sport. Just like everybody can play basketball, but not everybody's going to play the NBA, right? So the first thing with trading is to figure out, is this something you genuinely like or are curious about? Because if it's just you're doing it for the money, there's other ways to make money, right? You can do a lot of stuff online that you can make money. And so why trading? So I think that is really important. Because if you're not curious about it, it's going to be tough. You're going to quit. Most people give up within the first year because they like the allure of the markets and the money that's involved. But if they're not actually interested in it, it's not going to work out. So that's number one thing. Number two thing is first, people should start with investing. That's the foundational element. because you might have another job, you might have another business, you probably don't have time to sit in front of your computer like I do every morning to actually do the trades. So the first thing is, okay, what can I start? Let's just start being involved in the stock market. And you can do that just by investing in it, right? By buying an index fund, right? By just buying the overall market, S&P 500 or the NASDAQ. And the first foundation I tell people is to take 10% or what percentage you're comfortable with of your income that's coming in every month. And that should be automatically sent away to the markets without you even looking at it. Because if you did that, then you would have got roughly 10% or so compounded returns. So your money would typically double every 6 years or so. And most people don't have the foundations correct. So I think you need to have the first foundational element correct before you jump into start trading. Because for trading, you need disposable capital, something that you're not going to need, something that you can put in an account and keep working towards. So that would be my step one, is just let's start investing first. Let's get your basics in order, right? So that your financial future is secured. Because even if somebody starts now, within the next 20, 30 years, they could be a really good position if they get into the discipline of putting in every month without worrying about if the market's going to crash, what the economy is going to do. Just every month, money should be going out of your account. You're not looking at it. And in 10 to 10, 20 years, like you'll be like really thankful for yourself, even with a small amount that you started with. So I think that's the step one. And then step two, obviously with trading, you already mentioned, you got to have a mentor. I'm learning how to play golf. I'm learning how to play the piano recently. So I got my coaches, right? I take lessons every week so I can get better. I wouldn't try to wing it, because even if I learn a song on the piano, but my finger placement's incorrect, I'm learning bad habits. So same thing with trading. You got to get a mentor to show you how to do it the right way.
Mm-hmm. And you touched on that consistency piece there out of the gate, just to get yourself in the habit of putting that money aside. How many people get down the road and they haven't considered investing, and they look back and there's that woulda, coulda, shoulda. If I would have just been putting incremental, like you suggested, 10% of your income. If you can do that, take away that 10% before you're spending it on anything else and just make it that your habit, you will just come out so far ahead of the game. And then you add in the investing piece on top of that. And I'm trying to think of the stat that 90% of all online traders lose money. Is
Yeah,
that
so the stat is both correct and not correct in a way that if you take the overall population, the stat is correct. 95% of people will lose money. But then also 95% of the people don't have any idea what they're doing, right? They're just like buying a stock. I read an article or my uncle told me about this company. And that's obviously gambling, right? That's you're just speculating on stuff. And so, yeah, I'm not surprised 90% people would lose money. But then that's also like saying, if my mom bought a stock, right, and she lost money on it, well, is she really a trader? But she'll be counted as a trader in the statistic, right? The real statistic, I would say, if you actually genuinely learn how to do this, you have strategies, you have your metrics, you've been doing it for over a year, then it's like the success rate's much higher. But for the most people don't spend time looking at it. They maybe watch a YouTube video and they're like, "Oh, I think I got the trading part," but that's not the reality. So it's like you can learn how to ride a go-kart, but when you get into a Formula One car, it's a different ball game. So I think the stat is correct if you include the population, but just like I wouldn't call my mom a trader if she bought a stock, you gotta have a different statistics for that. So I think the real number probably still a high failure rate in trading, because you're playing at the top of the game. We're competing with people from Goldman Sachs, JP Morgan, other professional traders. So the statistics is going to be different. But in our community, it's roughly about 60, 70% people are doing really well. And 30% of the people typically are not going to do well. But that's, I guess, with any other business.
Yeah, and that reframe there of gambling, I'm like, okay, that makes total sense. If you're just throwing your money in there without having a sound foundation of why you're putting the money in there, you might hit some home runs and you might also lose all your money. So gambling, that's a very great perspective. So what do you think the biggest investing or trading mistake people should look out for and avoid?
Yeah, I think the biggest is like trading on emotion, right? Because we are emotional. When we see our money moving up and down, we can tend to make wrong decisions. Just like in the year 2008, the amount of people in America that sold the stock market when it was going down, and they vowed never to invest in it ever again, right? Occupy Wall Street, all these movements happened. People said the stock market's a scam. We're never going to invest in it. And yeah, we got that crash in 2008. But since then, we're up like thousands of percentage points since that time. And those people who never invested because of emotion, they're the biggest bull run we've had in our history, right? They would have quadrupled their money if they still had it in there, but they pulled out. Why? Because of emotion. And that's what a lot of people do in this market too. They say elections coming up, or the Federal Reserve is doing this, or the country's going this way or that way. All these are just talking points to keep you away from investing, or for the average person to be scared into selling it. But guess what? The stock market has always been higher than where it was 10 years ago, every single time. So if you just have a long enough timeline, you can just ride that wave. I think that's the big thing with investing. Investing, you should not look at, if you're going to invest in the long run, why are you looking at the stock price every day? There's no business to do that, right? So investment, the rule of thumb is to just have your money going in there, working for you, and you're not even looking at it. When it comes to trading, the mistakes people make is a stock is going down, and rather than getting out and taking what could have been a small loss, they'll keep holding. Maybe it'll come back up. Warren Buffett talks about buy and hold, but a lot of people end up doing buy and hope is not a strategy, right? So I think that's one thing. The other thing is when stock is going up, they don't know any idea on when they're going to sell it. So they keep holding. The stock is up big time, but rather than taking a profit, they'll keep holding. Maybe it'll go back more. I think it's going to go back up higher. They clearly are trading without a plan. Just like you wouldn't enter a business without a business plan, with trading, investing is the same thing. You shouldn't get into it without a plan. When are you going to get out if you're wrong? When are you going to get out if you're right? How do you know when you're right? So I think those are the questions that people need to answer before they do any trade or investment.
Mm-hmm. Very valid points in there. You don't want to go in there with that buy and hope strategy. I
Yeah.
feel like that falls back into that gambling kind of category. That's fascinating. I'm curious. So the investment part of it, the trading for investing, you had mentioned that that's how you view Bitcoin. So for somebody who's trading in the stock market and learning that investments, would you suggest that that's where they start? Or do you suggest that they do have some Bitcoin in their portfolio when they're doing that 10% a month?
For 90% of the people, I would just say do stocks. Why? Because that's proven, right? We have historical data for like going on thousands of years, right? Pretty much at this point. So we have historical data for that, and it's proven to always go up. Crypto is still very new. So it's not a sure thing. It's still a speculation. It's still a gamble. It might be something one day, and if so, you're going to hit it big. But if not, then the opposite is zero, right? So there's no real middle ground where the stock market is never going to go to zero because it's the whole economy, right? And it's the way the markets are designed. The stock market is designed in a way to always go up. Why is that? Well, because every year in the S&P 500 or the Dow Jones, they remove all the bad underperforming companies, they remove them, and then they add all the good ones. So it's always designed to go up because if they kept the exact same stocks that were still in the market like 30 years ago, the stock market would have already crashed. But they remove all the bad ones, they add all the good ones. So it's designed in a way to always long-term go up. And also it's the part of the American culture, right? 401k, IRA, everybody every month puts in money into the market. So it's designed to always go up, whereas crypto is still speculation. Now there's room for speculation in a portfolio. You could say, okay, you know what? Maybe 8% of that, I'm going to put it in the sure thing in the stock market. Maybe 2% I'll play with, right? Let's see what happens. But you never want to make it a big chunk of your portfolio. I'm not a believer in Bitcoin, but that's just my personal opinion. I have other cryptocurrency that I hold, but for me, crypto is like the early stages of the internet, where MySpace, AOL, they were the first ones, the revolutionary concept that started it all. Then there was better, faster technology, right? Facebook, Google came in, and now MySpace and AOL don't exist. So same thing I think will happen with crypto. Bitcoin's like the AOL or the MySpace of it. It was the first concept. It started it all, revolutionary concept, right? But now there's way better, faster, cheaper technology available that does the same thing, but way better. So I think that's where I'm seeing it go as far as the cryptocurrencies. But it should never be a big chunk of anybody's account because then you're basically putting it on red or black on a roulette table. And if you're going to do that, you might as well do that in an actual casino because you get to have some fun. They give you free drinks. You might as well lose money that way than sitting in your computer and putting in a stock and watching it go down.
Yeah, that's great. I really appreciate your input on that because the younger generation, I feel like, are all in on crypto, and there is that gamble piece that's not proven, and they're kind of skipping the stock market because they want the quick win and they want it today, right? So I thank you for sharing that. And I'm curious for you, what are your favorite places to go to collect the news and the data that you need, and how much of your like daily time is dedicated to collecting that data?
With my strategy, I look at technical charts. So I look at the price history of the stock, like kind of where it's coming from, what the trend is like. If the chart is obviously going in a nice uptrend, then I know this is probably going to be a good one to hold until the trend ends, right? And if stock is clearly just continues to going down, I don't want to bet on that this is going to be the bottom, right? I want to let it actually turn and transition and go back, start to make an uptrend. So for me, I'm a very technical trader, so that helps me a lot because it saves me a lot of time that I don't have to scour the internet for news. I don't have to look at all this research that's technically old research because if it's already published somewhere, well, other people have already looked at it, so it's already counted for the market. So for me, it's all chart patterns and technical analysis. It sounds like a new language to a lot of people because it will be new if you've never looked at it. But we're basically recognizing patterns. Why does the stock keep going up to $10? And every time it goes to 10, it comes back down to 9. Then it goes to 10 again, it goes back to 9. Then it goes to 10 again, it goes back to 9. So we know, okay, so 10 is kind of like the ceiling, right? It seems to stop there. So then what we do is when it finally gets above 10, we buy it because then it starts to break out and continues to an uptrend. So that's like an example of it, but it's harder to explain without visually taking a look at it.
My take on that, and correct me if I'm wrong or not. So you have the stock that's going up to that threshold of 10 all the time, and that's just kind of its normal. So if it breaks above that, then I'm assuming it starts getting attention from people, then the media starts catching on, and then there's a buzz. So therefore, people want to buy more of that. Is that essentially what causes it to spike more past that point? Or could it be, I guess, advancements in the company itself and different criteria? Like what usually causes those things to dip
Yeah.
about?
So many different factors. One of them you already touched upon. So when a stock has clearly been at, let's say, under 10 for so long, and it finally gets above it, so it does catch attention from news people. Oh, this stock is making a new high, or so it starts coming into the news, which gets more people in to buy, which causes it to go further up. But also, why did it stop at 10 before? Perhaps there was a big hedge fund, but perhaps there was a big seller who was continuously selling it at $10. So when now it's above 10, so what that tells us, the sellers are gone and the buyers actually absorbed all of that selling pressure. So the buyers are stepping up. So that's technically how we look at it. And then typically what ends to happen is now 10, which was the ceiling, actually becomes the floor. So from 10, it might go to 11. And then when it comes down to 10, 10 starts acting as like a buy point and keeps holding at 10. So the ceiling becomes the floor is the best way to think about it. But yeah, technically there's many different factors. As traders, we're trying to just make a bet on, okay, if it gets above this level, I'm going to look for the next level of area of target prices.
Okay, that's fascinating. Is this stuff that you teach to your students? Is this stuff that you are walking them through how to learn the patterns? For a brand new newbie investor that comes into your program, what kind of things are you guys walking them through behind your closed door?
Yeah, for one of our courses, which is an in-depth course, is like 20 hours of video lessons, and it's got like a 500, 600 page manual that comes with it. The reason we do that is because that walks people from wherever they are, like from brand new, from A to Z of trading the stock market, right? So it'll start off with the very basics. What is the chart? How do we look at the chart? How do we read the chart? What is a pattern? How does trading even work? What do the bars look like? We kind of go all the way from the basics and we keep building on that knowledge, and the course gets progressively more advanced as we go along. But then after they complete the program, we put them on a simulator account or like a demo account where everything is real. The market movements are real, the stock prices are real, just the money's not real, right? So we tell them to, okay, practice in that account, make all the mistakes you want. Let's refine your pattern recognition, because pattern recognition is not something you take a video course and now you just have it. You got to get good at reading and recognizing these patterns, right? So we have them go through a demo account for a while, practice along, ask questions, and then they start to build their pattern recognition and they start to see things happen that were taught in the course. And that's one of the reasons I do it live on the live stream, because then you can see me apply what you just learned in the course and me now actually apply it in real time and then answer questions too. But I think the biggest benefits of the live stream is what happens when I lose? How do I handle myself? That is key, because you can learn a lot from people's winning trades, but there's more to learn from when I lose, right? Because then you can see how am I emotionally handling myself. I'm not going greedy. I'm not being nervous. I'm not being jittery. I'm still staying calm, staying confident. So I think that those are the things, and they can only come when you have a plan and you've already tested your plan and see, okay, how did this specific strategy perform over the last 10 years if I did it? Now there's no uncertainty. I know this strategy wins 60% of the time. So if I lose sometimes, I'm like, oh, that's part of the 40% that I'm supposed to lose on anyway. So we're trying to be the casino in this analogy, I guess.
Okay, fascinating. I feel like we're just touching on the very tip of the iceberg here today, but I totally appreciate your insight into what life looks like as a trader, because I feel like there's this not stigma around it, but I feel like a lot of people going into it with that buy and hope and expect that they're going to make millions, right? So I appreciate your insights and hearing the work that goes along with learning to become an expert in this space. And I would love for you to share with the listeners where they can reach out, find you online, get access to your program, because if they want to be successful like you, I think they got to put in the work.
Yeah, definitely. I think the best way to get in touch with me would be my website, unmol.net. That's where you can learn about what I do and other things that I offer. And if trading is something specifically that you're interested in, then go to livetraders.com. That's our trading company where you can have a lot of access to free resources, and you'll get the introductory course that I recorded, which is about 2 hours, completely for free. And then when you watch that, that will give you a really good idea if this is something you should even get into. Because you might watch it, you're like, okay, not for me. And that's cool, right? And sometimes maybe you watch it, you're like, that's kind of interesting. I want to learn more. So I think that's where you can learn more about that. And social media, I'm more active on Twitter and Instagram. My username on both of those is Delta90, DELTA, NINETY. Don't ask me why. Had a long time ago, never changed it. And now I can't change it because it's all around online. So yeah, that's where you can learn more about me. And yeah, my book is on Amazon, Barnes and Nobles. It's called Prepping for Success: 10 Keys for Making It in Life.
Okay, awesome. I will link all of that in the show notes. And thank you so, so much for joining me on the show today, Anmol.
And thanks for having me. It's great chatting with you.